a positive trend in our view. The ability for Saudi banks to get financing outside of Saudi means there's more liquidity being pushed into the system. And it's telling the Saudi story, it's updating investors on what's happening in the economy. So all of this is a strategy that the government has made very clear, the regulator, the CMA and SAMA. So I think based on what we know about loan growth in the system being faster than deposit growth, it's logical that the banks will keep going to the capital markets for funding, for capital and liquidity. For us, we plan ahead. Like the other banks, we've been in the market this year a couple of times, and we have a program that's approved by our board. And next year, if loan growth is consistent around these kind of levels, then we would expect to go to the capital markets again in the US, and also increasingly investors from Asia are starting to get very interested in what's happening in Saudi and getting access to debt and potentially equity.
So you see an increased Asian interest in Saudi equity?
Yeah, the links between, say, the Hong Kong exchange and Tadawul have been put in place. There's an ETF tracker that we launched last year with Hang Seng Bank and Saab Invest, and so these two-way flows are being established between the Asian markets, specifically Hong Kong and Tadawul.
Given all the momentum in Saudi lending right now, when you think of your portfolio, how do you diversify your lending portfolio among all the sectors?
We have a very balanced portfolio. We don't overweight in particular sectors. We spread our risk throughout the economy and throughout the areas of focus for the vision. So yes, we're exposed to the giga projects. We're very supportive in the beginning around those projects and are still supportive. Projects like NEOM, the Red Sea and others, we've been, along with other local banks, been very supportive. Across the different sectors, whether it's construction, commercial, tourism, manufacturing, renewables is a particular focus of ours. We're very balanced, and so on the corporate side it's deal by deal at the large institutional and corporate level, and as the portfolio grows, say in the SME space, it's much more of a portfolio approach rather than an individual approach. But our SME growth has been really very good in the last 2 years. We invested a lot in digital, and that's allowed us to open accounts much more rapidly than previously, and we're very happy with that progress. Yeah, we used to be lucky if we signed up 50 clients a month going back when it wasn't embedded as a core strategy. We've always been a large corporate bank. Now we're signing up in excess of 1,000 new SME customers on a monthly basis, which is pretty big growth off a low base.
What about the momentum in the Saudi real estate market?
Growth has been very strong again this year. I think going back 12 months, there were many who thought that higher interest rates would start to see a slowdown, and I think for the industry overall there's been some moderation of very high growth that went back to 2021 to 23, that period of very fast growth. For us, our growth has been a bit faster than the sector overall. We have a more affluent book, we have homeowners, investors, etc. So our growth has continued, and we expect it should continue at current levels or slightly below. The changes that you've seen recently around taxes on land, around modifying rent growth, these aren't concerns at this point. We think that the demand for property in mortgage is still strong. The population of Riyadh keeps growing, and therefore there needs to be more houses. So the freeing up, or the tax on land that's not used and just sits idle, that should create development and extra supply, which overall will be a good thing for the market.
You paid around 2 billion riyals in dividends for the first half of 2025. Why do you keep paying out dividends at a time when there's an increased demand for financing?
We like to be consistent. I think our shareholders are grateful for that. So we've been very accurate when we talk to our current shareholders and potential investors. At the start of every year, we define our ambitions for growth, the returns on the portfolio, and therefore extrapolate our ability to pay a dividend. And we've been incredibly accurate the last 4 years, and we like to be consistent. So in balancing growth and our dividend payout ratio, we're always very clear. We expect the current levels, which have been consistent, to keep being consistent in the years ahead.
Just to conclude the interview, generally speaking, sector-wise, you're not worried about liquidity in the banking sector in Saudi Arabia?
I've been in Saudi, this is my 5th year, and I think I've had a conversation every year for the last 4 or 5 years about the tightness of liquidity. And it is a feature that when people think about loan growth exceeding deposit growth, you tend to think about the access to liquidity. But what we've seen recently is the ability for Saudi banks to go into the offshore markets and attract liquidity, deep liquidity, for all of the banks, not just SAB, and that's a positive.